Well, hello everybody, Bill Moore here. Today we are going to continue looking for low-risk trades in the sector ETF components. We once again have run our analysis with the 11 baskets that we've created, and I set the filters for 0.8 correlation, 0.8 RW coefficient, and 1.25 on the standard deviation. Okay. Then after I ran that, I went ahead and set it up to look for expectation values of 1.05 up and 0.95 down. And given that, we ended up with 100 and some odd various things. And all three of the recommendations from earlier in the week have still managed to appear. I don't know if you guys were looking at those or not, but we'll be looking at a review of those on the weekend. But in any case, today we are going to come back to the medical field and take a look at this one, BDX SYK. Let's give a closer look. So this one, at least for the last year and a half or so, almost 2 years, has had a very nice picture. It's gotten a little wider, a little bit bigger on its movements, but that's okay. I don't mind making money. It is not quite to the second standard deviation right now, and it's been kind of like hovering around down in this area. But let's take a look at the back tests. The back tests say that it had crossed outside of the second standard deviation 7 times in the past few years, and it returned profitably to the mean 6 times. Now, what does that mean? Let's see, when was our loser? Those are all winners. The loser was back in 2016. That would be somewhere down in this area. So the past 6 have all been profitable, 6 in a row profitable, and that's what this picture means. So let's take a look at it in more detail. I've already added it on this side. So this looks very nice. Like I said, it's been kind of waffling around now for a few weeks, but it took a nosedive. I haven't examined yet what caused this nosedive here. I imagine it was earnings or something, but maybe we should take a look and see if there was something. But then it's been kind of moving sideways here, and like individual stocks, pairs will tend to break out as well after some period of time. And I am going to bet, literally here, that based on where we are, we're very near testing the all-time bottom, or for the last few years bottom. I'm going to bet that it's going to break going to the upside. So perhaps we should go ahead and take a quick look at the news and see if there was anything interesting that happened there. Let's just take a quick look. Okay, here we are in Investors Business Daily. Let me show you what I found. Stryker, here we go. Stryker's share price gapped up 11% on January 30th after the company reported quarter four earnings per share up 11.2% and 9.4% increase in net sales. So that right there is the reason that we see this, right? Because Stryker gapped up, and Stryker is on the negative side of our trade, and that is why we got to see this. Okay. The other thing, let's take one more quick look at Stryker. Besides that gap up, you can see that, it hit a high. I think that's an all-time high, by the way, just a few days ago. That started moving back down a little bit, but there's a lot of people who bet these types of trends, right, on independent stocks. Now, that's not what we're talking about here. We're talking about relative value. And since everybody on earth is saying that they're going to buy this, I'm going to believe they're wrong, and I'm going to go and say it's going to come back down. It's beginning to come back down a little bit, but this could just be a pullback, a little bit of profit taking as well. So for you guys who are squeamish, maybe you would like to avoid this one, but I think I'm going to put this on my list and make it a trade. Probabilities, hitting probabilities. Here we are to get this one. Okay, a nice slope to this. The mean reversion is there. Of course, we could see that from the picture itself, but this is a visual confirmation as well. Let's run the simulation. The current price is minus 1864, and this is saying, given how it's moved in the past, that 30 days from now, we should be above that 97% of the time. So I think that's a little rich, actually, because you have to understand what your model actually does for you. And the model basically breaks up the prices into bins and says how does it move in each of those bins. And this is saying that given how it's moved in those bins, this is going to be up a lot. But more recently, it's been moving sideways, and it moved down before that. So I think that's a little strong, but hey, you know what? It's still very encouraging. And it's saying a target price of minus 0.23, that we're going to hit that in a little over a month as well, 50% of the time in a little over a month. So I think these are good enough numbers, and the pictures look great. I am going to watch this one. And let's take a look here. And I'm not going to put on the trade again until I see a little motion, because obviously this is a long and we're still showing a downward trend here. So I'm going to put this into my list, and if I see any idea that it's turning around tomorrow or Monday, I'm going to put this trade on, and hopefully it gets back up to here. So recommendation of the day is BDX minus 1.42 of SYK. It is a long, so for every share of BDX that you buy, you're going to sell 1.42 shares of SYK. Good luck with your trading, guys.